In today's show, I'm going to be sharing with you some insane evidence. Bitcoin has capitulated in the past 2 months, quoting Charles Edwards at Capriole Investments. The raw count of evidence for major Bitcoin capitulation today is insane. Each occurrence alone is a rare event, and as to the probability that forward risk returns are skewed positively, I'll be breaking down these 12 signs of capitulation, and Plan B updates us here. Bitcoin still far below the stock to flow and log regression model. July is the first small bounce back. Will it continue? And this just in, breaking news, the world's largest asset manager, BlackRock, to offer Bitcoin trading to institutional clients. This is a pretty big deal considering they have $8.5 trillion in assets under management. Also in today's show, tourists flock to El Salvador despite the Bitcoin bear market. Quoting Max Kaiser here, kaboom, domestic tourism exploding. El Salvador is now the safest country in Latin America. International tourism booming thanks to the new Bitcoin law. GDP in 2021 grew by 10.8%. GDP in 2022 expected to exceed. El Salvador bonds are zooming higher, and volcano bonds coming in Q3. Also in today's show, Japan may see a reduced 20% tax on crypto earnings with their new proposal. That's right, check it out. The proposal calls for a separate 20% tax on crypto earnings and exemptions of any tax on crypto gains, with losses carry forward for up to 3 years. Also in today's show, Bitcoin may behave more like U.S. Treasury bonds, according to Bloomberg Intelligence. Quoting Mike McGlone from the latest Crypto Outlook report, tightening markets and plunging global growth support the Federal Reserve's shift to a meeting-by-meeting bias in July, which may help pivot Bitcoin towards a directional tilt, more like U.S. Treasury bonds than stocks. Also in today's show, hedge fund CEO Anthony Scaramucci says Bitcoin has already bottomed and has a fair value of $40,000. Quoting him here, according to our fair market value metrics, based on adoption, wallet size, use cases, growth of wallets, we think the fair market value for Bitcoin right now is about $40,000. We'll also be taking a look at the overall crypto market. All this, plus so much more, in today's show. Here at Crypto News Alerts, I do a $50 Bitcoin giveaway every single day. All you need to do to qualify to win is make sure you're subscribed to the channel. Will Smith, that like button, and drop us a comment right down below, and today's winner will be chosen at the end of the show, so stay tuned. And today's episode is brought to you by BlockFi, the #1 leading provider of financial products and services for crypto investors. And because I've been working with them for 2 years, here on the channel, they have an exclusive offer for you where you can get up to $1,000 in Bitcoin when you buy, sell, or trade crypto with BlockFi using my referral link in the description right down below. Personally, I love their trading platform because you can sell and trade all the top cryptos, including Bitcoin, Ethereum, as well as USD-based stablecoins through the BlockFi app. You can do instant trades with ACH. You can trade 24/7, as well as set up repeat trades to automate your crypto portfolio. So go ahead and use my referral link in the description right down below and claim your bonus of up to $1,000 in Bitcoin. And let's get this crypto, shall we? All right, welcome back to another episode of Crypto News Alerts. This is episode number 1007. I'm your host, JV. How's it going, my crypto fam? Bitcoin is providing overwhelming evidence that it is capitulating, and it is time to flip bullish as a result. New analysis believes. In a Twitter thread on August 3rd, Charles Edwards, CEO of crypto asset manager Capriole Investments, revealed what he called the 12 Bitcoin capitulations. As he shares here in this tweet, I'm going to be giving you the highlights. Risk return skewed positively for Bitcoin. Some are demanding a return to levels even lower than June's 17,600 low, while others argue that a bear market relief rally could take Bitcoin as high as $40,000 first. But for Edwards, the raw evidence suggests that the past months have been bearish enough and that behind the scenes, Bitcoin has been quietly capitulating. Quoting him here, the raw count of evidence for major Bitcoin capitulation today is insane. Each occurrence alone is a rare event, and as to the probability that forward risk returns are skewed positively, and in addition to popular on-chain signals previously covered by Cointelegraph, including the MBRV and NUPL, Edwards' evidence includes macro triggers such as poor United States equities performance and stagnant M2 money supply growth. As he shares here in number 7 of the thread, the worst stock market, real returns in 250 years. We have just seen the worst inflation-adjusted down draws in traditional markets in the last 8 generations. Enough said. And he continues, this is epic. 2022 S&P 500, real returns worse in 150 years. Now, the cherry on the cake in the 2022 Bitcoin bear market, however, is the rate at which the industry players themselves have capitulated for Edwards bankruptcy events such as Celsius, Voyager, and others, combined with Tesla selling the majority of their Bitcoin holdings at a loss, is the ultimate sign of capitulation. As he shares here in number 12 of the thread, the ultimate sign of capitulation, bankruptcies. Take a look at the level of institutional capitulation here. Leverage is one of the best indicators for relative over and undervaluation in Bitcoin, and many major leverage crypto institutions have been wiped out. Facts. And according to separate data from monitoring resource Bitcoin Treasuries, Tesla remains the public company with the second largest Bitcoin reserves, but it is now far behind the leader MicroStrategy and its 129,698 BTC stack, which you can see here. Number 1, MicroStrategy. Number 2, Tesla. Number 3, Core Scientific. And number 4, Marathon Digital Holdings. Now let's discuss the great accumulation zone returning. As previously reported, capitulation has now been apparent amongst Bitcoin miners since the dip to the lowest prices since late 2020. After initially selling their Bitcoin inventory, miners have staged a dramatic about turn, new data suggests, and yet another sign that the worst of the capitulation may already be over. That's right, beyond miners, the amount of the Bitcoin supply being transferred at a lower price than at which was paid for has hit levels that Edwards says are indicative of accumulation. Quoting him again here, the percentage of the total supply transferred at a loss hit 1.9% last month. And he also said, historically, when this metric breaches 1.5%, it demonstrates that a large portion of the market is in pain. Most were also great accumulation zones. So there you have it. Let me know if you agree or disagree with Charles Edwards at Caprioli Investments. And to check out these 12 Bitcoin capitulations, the full thread, check the show notes below the video in the description. Now for the latest update from Plan B, creator of the Bitcoin stock to flow model. He recently wrote, Bitcoin still far below stock to flow and log regression model. July is the first small bounce back. Will it continue? Let me know in the comments below. And this just in, breaking news, the world's largest asset manager, BlackRock, to offer Bitcoin trading to institutional clients. They currently have $8.5 trillion in assets under management. And before I break down next story of the day, tourists flock to El Salvador despite the Bitcoin bear market, which is obvious here. You can see many of the top cryptos currently correcting. And in the red, we got Bitcoin down over 1% for the day, maintaining just above $23,000 at the time of this recording. Ether down 1.7%, trading at $1,634, while XRP, Cardano, Solana, and Polkadot all correcting and in the red, while Binance Coin is breaking out and in the green, up 4.5%, trading at $306. But all right, now let's break down our next story of the day. Tourism in El Salvador has soared in the first half of 2022, up 82.8% just this year. There were 1.1 million visitors to El Salvador thus far this year, according to government figures. That's despite the price of Bitcoin sinking almost 50% since January 1st. Data from the World Travel Organization reinforces the claims. The tiny Central American country is internationally recognized as one of the countries with the best rate of tourism recovery in the region as of January 2022. That's right, the report states that some Central American destinations have the best results compared to 2019, including El Salvador at 81% compared with 2019 or pre-pandemic levels. And contrary to reports from the Wall Street Journal that El Salvador's bet on Bitcoin to attract tourists hasn't worked. Visits for the first half of this year almost outpaced total visits in 2019. 1.1 million people visited the country in 6 months compared to last year's total of 1.2 million. Let's go. And in a new radio interview, the General Director of Strategic Projects of the Ministry of Tourism of El Salvador, Alex Panilla, explained that over the summer holiday period, the country can expect 57,500 international visitors, which will generate $60 million in foreign exchange during this vacation. And it's expected that the 1.2 million figure mark will be beaten soon. And since El Salvador adopted Bitcoin as a legal tender, literally thousands of Bitcoiners have made the trip. Big name Bitcoiners such as Jeff Booth. We also have Max Kaiser and Stacy Herbert of the Orange Pill Pod, the CEO of Fediment, as well as Samson Mao, who is running for mayor of Bitcoin City. Quoting Jeff Booth, number one, El Salvador has reaffirmed to me what I have learned from my travels throughout the world. The vast majority of people in this world are beautiful people with similar hopes and dreams for a better life for themselves and their families, trying their best to achieve it. A Bitcoin analyst, Tone Vase, said of his visit to El Salvador that 99.9% of the world has no clue where the country was, and maybe 98% didn't know this country ever existed, but now El Salvador is certainly on the map now. Now, Bitcoin advocates are keen to bring home exuberant tales of their trip to the land of volcanoes, and at the same time, Bitcoin-centric companies are motivated to make El Salvador's Bitcoin play a success. That's right. For example, we have Max Kaiser and Stacy Herbert, true Bitcoin OGs that have been telling people to buy Bitcoin back when it was under $1. Via the Kaiser report, they chose to take up the residency in El Salvador and now base their podcasting and broadcasting operations in El Salvador as well. And as part of the Bitcoin bill, residency in El Salvador could effectively be bought for just 3 BTC, which is currently worth around $66,000 at the time of this recording. Quoting Escape to El Salvador here, it doesn't automatically mean you're a resident. You still have to apply, but you can use the holdings as your justification for the applying. Like a student could use a letter of acceptance from a university for a student visa, there is still a process. Now, El Salvador, known as El Jalador in some circles, hosted a bevy of central bankers in May of this year. The influential group of visitors did not discuss Bitcoin, according to the Central Bank of Paraguay, whose delegate was a tourist in El Salvador. However, there are numerous photos of the 44 central bankers and economists using the Bitcoin Beach wallet in El Zante, the birthplace of the Bitcoin adoption in the country. Now, the capital, San Salvador, hosts the Adopting Bitcoin Conference, a Lightning Summit in November of this year. There's going to be over 80 Bitcoin and Lightning Network experts, which will take the stage during the conference, with representatives from Blockstream, Spiral, as well as the El Salvador government. So there you have it. Let the mass Bitcoin adoption continue. And before I break down next story of the day, Japan may say a reduced 20% tax on crypto earnings with this new proposal. But first, let's take a quick look at the overall crypto market cap, sitting back under $1.1 trillion with $62.5 billion in volume. In the past 24 hours, the current Bitcoin dominance is 41.1%, with the Ether dominance at 18.5%. And checking out the top 100 cryptocurrency gainers in the past 24 hours, we have Optimism leading the pack, up about 9%, trading at $1.93, followed by Chili's, up 6.6%, trading at 14.6 cents, followed by Lido, up 4.5%, trading at $2.45. And checking out the top 100 cryptocurrency gainers for the past week, you can see a sea of green, which I love to see. We have Optimism leading the pack, up 76.4% for the week, Filecoin up 47%, and Chili's up 28.2%. And checking out one of my favorite indicators is the Crypto Greed and Fear Index. Shows we are currently rated a 30 out of 100 in fear. Yesterday a 34, last week a 32, and last month a 19 in extreme fear. But all right, now let's break down our next story of the day. The Japan Crypto Asset Business Association and the Japan Crypto Asset Exchange Association, the two prominent crypto advocacy groups in Japan, released a tax reform request that calls for lowering taxes for individual investors on crypto earnings. Yo, United States, you're getting left behind. Just saying, Sleepy Joe, what are we going to do about this? The fiscal 2023 tax reform request addresses key issues that the advocacy groups believe act as a hindrance to the crypto adoption in the country. The proposal focused on the need for improvement in the individual tax filing environment, the importance of crypto assets in Japan's Web3 strategy in comparison with overseas crypto asset tax systems. The proposal calls for a separate 20% tax for individual crypto investors with provisions to carry forward losses for 3 years from the following year. The proposal also calls for the same tax structure to be applied on the crypto derivatives market. Now, the 20% separate tax on crypto earnings with an exemption on unrealized gains would prove to be a big relief for crypto investors in Japan, who currently faces taxes of up to 55% on their crypto investments. Massive difference, to say the least, right? The Japanese crypto groups have been working to ensure that the crypto industry thrives in the country with a particular focus on tax reforms. These crypto lobby groups believe that a high tax rate would make it difficult for businesses and individual investors to hold digital assets in Japan compared to more crypto-friendly nations, such as El Salvador, right? Crypto taxes were the focus of several governments around the globe this year, with many countries implementing high tax slabs, while others moved to abolish or delay it due to a lack of clear regulations. For example, India imposed a 30% tax on crypto gains in April of this year, while Thailand scrapped its 15% crypto tax proposal and even exempted traders from 7% value-added tax to encourage crypto adoption in the country. And similarly, South Korea postponed its 20% proposed crypto tax policy to 2025. probably more likely due to the crypto bear market, but let the Bitcoin game theory all around the world continue. And before I break down next story of the day, Bitcoin may behave more like U.S. Treasury bonds, according to Bloomberg Intelligence, as well as hedge fund CEO Anthony Scaramucci says Bitcoin has already bottomed and has a fair value of $40,000. But first, I want to remind you to smash that show more button right below this video in the description for detailed analysis of what's going on in the crypto market. This goes for all 1,200 plus videos right here on my YouTube channel. And don't forget to smash that subscribe button and Will Smith that like button and drop a comment below to qualify to win for the next $50 Bitcoin giveaway. The winner from today's show will be announced at the end of tomorrow's show, and the winner from yesterday's episode will be announced at the end of today's show, so stay tuned. But all right, now let's break down our next story of the day. The latest crypto market research from Bloomberg Intelligence suggests that the king crypto may start to behave more like U.S. Treasury bonds and gold rather than stocks. That's right, in its August Crypto Outlook report, penned by senior commodity strategist Mike McGlone and senior market structure analyst Jamie Couts, the research unit compared Bitcoin markets to those of gold, bonds, and oil, and the authors suggested that the macroeconomic influences, such as the Federal Reserve's monetary policies, have resulted in similarities in Treasury bond markets and Bitcoin, quoting them here, tightening markets and plunging global growth support the Federal Reserve's shift to a meeting-by-meeting bias in July, which may help pivot Bitcoin towards a directional tilt, more like U.S. Treasury bonds than stocks. And they also added that a dump following pump nature of commodities and receding bond yields suggests an increase in the probability of bonds and gold and Bitcoin being buoyed as inflation decreases. Now, Treasury bonds, often called T-bonds, are long-term government debt securities issued by the U.S. Treasury Department. They have a fixed rate of return and maturity periods ranging from 20 to 30 years. The report noted that crypto markets reached their greatest ever discount compared to the 100-week moving average in July. It added that it's abnormal for Bitcoin to hold much below its 200-week moving average. And at the time of this recording, we're trading just above that 200-week moving average, which currently lies at $22,800. And the analyst said that the fact that Bitcoin was 70% below its peak at the start of August, but still 5 times higher than its March 2020 low, shows its potential. That's a fact. They flagged the $20,000 zone as key support, and they expect a base in building similar to the $5,000 level in 2018 to 2019. The researchers concluded that Bitcoin had been one of the best performing assets since its inception about a decade ago, adding the following: we think more of the same is ahead, particularly as it may be transitioning towards global collateral where it results more aligned with Treasury bonds or gold. And to check out this Crypto Outlook report published by Mike McGlone from Bloomberg Intelligence, check the show notes below the video in the description. But all right, now let's break down our final story of the day. SkyBridge Capital founder Anthony Scaramucci, the Mooch, says that Bitcoin is way below its actual fair value and that the bottom is likely already in for the king crypto. Let me know if you agree or disagree with the SkyBridge Capital CEO. In a new interview with MarketWatch, the veteran hedge fund manager says his firm's metrics puts Bitcoin's value at roughly $40,000. Now, Bitcoin is currently changing hands at $23,000 at the time of this recording, about 70% below what Scaramucci says is its fair value. Quoting him here, we believe that the leverage has been blown out of the system. I don't think it's going to be below the low that was reached for this cycle, which would be around $17,500. And according to our fair market value metrics, based on adoption, wallet size, use cases, growth of wallets, we think the fair market value for Bitcoin right now is about $40,000. You're damn straight. Now, Scaramucci says he believes the top smart contract platform, Ethereum, is undervalued as well, with its fair value sitting at around $2,800. He also says that the technical indicators suggest that Bitcoin and ETH are vastly oversold. However, he's not necessarily predicting an imminent breakout for the king crypto or Ethereum anytime soon due to the macroeconomic headwinds. As he shares here, we on the margin are net buyers. As incremental cash comes into our funds, we are net buyers of those two assets because we think that they are fundamentally undervalued and technically oversold. Again, these are volatile assets. I guess what's at issue here is people need to take 4 or 5 years view of these assets. And the hedge fund CEO adds that he expects that the recent inflation affecting markets to die down by the end of the year. Quoting him again here, I think the second half of the year is going to be a surprise to people because that's already a slowdown in consumption. There will likely be a shallow but not a deep recession because people have a tremendous amount of savings and there are more jobs available than people looking for them. So there you have it. Let me know if you agree or disagree with Anthony Scaramucci that the Bitcoin bottom is already in and that the fair value for the King Crypto is $40,000. Let me know in the comments below. Now for the moment you've all been waiting for, today's winner of the $50 Bitcoin giveaway is Craig Sexton, who wrote, "Thanks JV, great updates and perspectives on which way Bitcoin is going." And I just wrote this response. Massive congrats, Craig, on winning the $50 Bitcoin giveaway. Please reply to this message with your Bitcoin address so I can send it to you. HODL, so congrats once again. Now for the top 3 comments from yesterday's episode. Chris Minka wrote, "Congratulations to the new 40,000 Holtcoin family members. If you're not a Holtcoiner, don't be discouraged. Remember, 1 Bitcoin equals 23,000. 0.1 Bitcoin is 2,300. 0.01 Bitcoin, $230. When Bitcoin 10x's, 1 Bitcoin is $230,000. 0.1 Bitcoin is 23,000 and 0.01 is 2,300. 0.1 to 0.01 range will be worth a lot. Just DCA and HODL, sage advice." Thanks for sharing, Chris. Our next featured comment comes from Atanas, who wrote, "JV, I'll only say that in these difficult times globally and in non-recessionary times, this bear market will show you who has balls, aka cojones, to be the real HODL." Cheers, Atanas. You got it. Balls of steel. HODL. And our third and final featured comment comes from Franklin Thomas. "I've been listening by way of podcast since the new year. Watched here only a handful of times," referring to YouTube. "I plan to catch the show here. Guess your giveaway convinced me. Thanks for the cut to it info, JV, and the chance to win. I appreciate your continued support, fam. Thanks so much for tuning in. One love, and to be featured on tomorrow's episode, drop me a comment right down below. That will also qualify you to win $50 on tomorrow's giveaway.